Hi, I'm Eddie Sanergy, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We're here with Adam Blumberg, co-founder at Interaxis. Adam, welcome back, sir.
Mehdi, good to be back, my man. Good to be talking a little crypto today. It's been a busy last few weeks.
Yes, it has, and obviously there's always stuff to talk about, but I feel like we have some real gravitas topics today. So, we're going to be talking about our old friend Ray Dalio commenting on nations having less desire to accumulate dollars. Let's see what that kind of means for the crypto world. The continued lack of confidence in crypto. There were some surveys done which highlight that still a lot of the public is not feeling that confidence that we'd like right now. Then we've got the SEC going after Bittrex and how they may be an innovation killer. This type of action, non-action, around the SEC, it's causing more hiccups. And even Coinbase is threatening to pick up shop and move out the US. And we've seen SEC's chairman Gensler continue to not deliver clarity. And finally, we'll wrap up with some applications, which is always I see as a positive. Our friend Mr. Musk, Elon Musk at Twitter, is bringing crypto and stock trading to the Twitter universe. And the FICO's blockchain usage is now being patented, or as you probably say, patented. Um,
Right.
so, yeah, there's definitely a lot of topics to cover this week. So, without further ado, let's dive off on the macro conversation.
Go.
We've got Ray Dalio, right? So Ray Dalio was on a podcast or a video stream, and he was talking about everything financial, and obviously the thought conversation around the US dollar came about, and he raised a fair point about how more and more nations are starting to question their holdings in the US dollar and if they need to be that exposed.
I think there's several crypto implications, and of course, my mind naturally goes there. But I'll say this first, Mehdi, because I've said this to a few people, excuse me, this week, that my understanding and learning about crypto, about Bitcoin and ETH, and about how these all work, greatly influences and greatly helps me understand what Ray Dalio is saying. Right. So if anyone is on the fence about do I want to learn about Bitcoin, do I want to learn about crypto and such, I can almost guarantee you that you'll have a better understanding of how fractional reserve banking works and how the Fed works and how the dollar works and how currency, central bank currencies work by understanding how Bitcoin and crypto work. So we'll say I'll go ahead and state that first. After that, you're talking about Ray Dalio and what he's saying that countries are less likely to be holding dollars, and as a matter of fact, I think the data is showing this. I'm going to go ahead and guess that Ray Dalio's data is accurate. I'm not going to question it. But I've read other articles and I've heard other people having this discussion that countries are more likely to not necessarily trade in the dollar, and which is somewhat important. The more important piece that Dalio was hitting is countries are less likely to actually hold dollars, because holding dollars is akin to holding onto our debt. We know that the U.S. government is in a tremendous amount of debt and just keeps running it up more and more and more. And in the past, I think countries were willing to hold on to our dollar, thinking either the U.S. is going to curtail that or it's better than we can get anywhere else. Right? We'd rather hold that dollar and hold on to that essentially debt instrument because everyone else's debt instrument is worse. And now what we're seeing, based on what happened with all the money printing, because of COVID, based on what happened with honestly the censoring of money through Russia for Russians and their inability to use the dollar, is you've seen countries that are aligned with Russia, like China and India and Iran, want to do business potentially in other currencies. And we're also seeing those countries want to hold other currencies. So it's not necessarily this idea of you and I transact in dollars. We might be in different countries and we can transact in dollars because the banking system uses dollars. But then once you get the dollars from me, what do you do? Do you hold on them in your bank in dollars, or are you going to convert that to gold? Are you going to convert that to yen or yuan or Bitcoin? Right. So the interesting point here is countries are looking at, and therefore individuals and banks and such are looking at other currencies, and that's where we've been talking about Bitcoin for quite a while as potentially being a standard there, or a one of the reserve currencies in the world, where you might see countries holding something like Bitcoin because, again, everyone can see how many there are, everyone can see where they are. We know there will only ever be 21 million. All of those characteristics we like about Bitcoin. Now countries are starting to question, do we hold a dollar? And that's where crypto, and in this case specifically Bitcoin, kind of works its way into the conversation.
So, Adam, that's I appreciate that, the thought process behind all of that. Now, playing devil's advocate, just picked today. It's April the 19th. This morning we saw, we were hovering around 30,300, whatever it was, on Bitcoin this early in the morning. And then it dropped about $1,000 pretty significantly soon after, or around the time of the CPI numbers in the UK. So we have an indication of what's happening in the UK from an inflationary perspective. Now, forget the argument that people have been posing that Bitcoin isn't an inflation hedge and whatever. In this case, it certainly isn't. But forget that argument. My point is that we see something happen in the UK. There's a news line comes out. CPI numbers are, they're not as anticipated. Inflation is still ripe. It's 10% plus. Bitcoin immediately sells off, let's say 4 or 5%. Right. So we're sitting in the US, you're sitting in Venezuela, wherever it is, you're now getting your tail, the dog's being wagged by the tail from the UK. So how can you feel comfortable as a nation or a corporate or sovereign, whatever you want to say, investing treasury side, which is that exposed to other countries' fluctuations on their data points?
That's a really good question, Mehdi, and I'm not a macroeconomist to really have that answer. Again, I said this is where Bitcoin kind of enters the conversation. It doesn't mean it is the end all be all. What it means is other countries have, I think what I'm saying is other countries are entertaining the idea that we don't just have to hold US dollars. Right now, again, that has Bitcoin enter the ring potentially, and I understand it has volatility. I understand the price of Bitcoin right now has fluctuations in the US against the US dollar based on what happens in the UK or in Europe or in Singapore or in China or in India or in any other country that the US had no part of, right? So the value of my asset, if I'm a company in the US or if I'm the nation of El Salvador, the value of my treasury has gone down by virtue of nothing that I've done, right? I haven't done anything wrong. I might have done everything accurately, but I think the idea here is, Mehdi, those countries maybe would rather be subject to the world economy a little bit than subject to the whims of the US government.
So let's now move on to something a little bit slightly different, right? So there was an article out this week. Pew Research had conducted some studies on people's understanding and confidence in crypto. And some of the statistics were quite shocking. And this goes back to everything we always say, right? You've got to educate yourself. You've got to understand more about crypto, digital assets to feel more confident in what you can and can't do and what you should and shouldn't do and what sort of allocation of your resources and finances you should put towards these things. But they said that 75% of Americans who had heard about cryptocurrencies are not confident in their safety and reliability. Now, this is a pretty big hurdle for the crypto and digital asset world to get over if this is the type of understanding and lack of confidence people have in this market.
Oh, it's a huge number to get over. And look, I completely understand it. I play around with crypto all the time. I play with different wallets and custodial solutions and move money around. And I've taken a long time to understand how it all works. And there are days where I don't understand what's going on. I have to go search and figure out what the problem is. And I'm pretty well versed in it. So I completely understand that. It's a monster hurdle. It's something a lot of teams are working on. And a lot of this, of course, goes back to recent memory. We remember what happened last year in such a horrible year for crypto with Terra and Celsius and Voyager and FTX. And we remember how many people lost money And the number of people, Mehdi, that ventured into crypto when Bitcoin was at 60,000 or so and have lost over half their money if they've held it that long, right? And likely they sold at some other point where they lost a good deal of their money. So of course they're going to have a bad taste in their mouth. Of course they're not going to trust it. And on that, you also have regulators telling us how, what a scam it is. You have regulators telling us how unsafe it is. And if we don't allow them to go regulate it, then we're all going to lose our money. Then of course you have most people that don't trust it. And I totally get it. I understand there's a lot of scammers, there's a lot of frauds. And honestly, there's just a lot of ways that you can lose your money that have nothing to do with picking the wrong investment.
Well, you said it there a couple of times. Let's talk about the regulators and regulation. And I feel, I don't know why that just came to me, but I feel like there used to be a show called Regulators. I'm gonna have to dig that
Fairly
up.
certain there was, and we can go back 90s hip hop regulators, Warren G, big fan.
That's it. But onto the regulation side, we've obviously seen our friend Gary Gensler all over the press and the news. But the SEC has gone after Bittrex in new enforcement action. They're saying that several crypto assets are classified as securities. Do you have any comments or thoughts around this? Do you think this is they're warranted? And again, this should show the public that the SEC's trying to get on top of things.
Right. Look, I kind of feel like whatever Bittrex was doing. Look, I used Bittrex at one point years ago, and I didn't have to use a what do you call it, a VPN to use it at all. I just signed up for a Bittrex
Oh,
account.
you didn't? Okay.
Yeah, this was back in 2017, 2018. Signed up for a Bittrex account. It was no problem. Now I couldn't put dollars in. I had to buy Bitcoin elsewhere and move those Bitcoin over, and then I could exchange Bitcoin for I don't know, probably thousands of other cryptocurrencies. And honestly, trading on Bitcoin on Bittrex is what got me really interested in crypto because I had to understand why there were so many. What do all these mean? All I was looking at was charts, and honestly, that's what most people were looking at is just charts. No one knew what they were. They had very little application. They were just various tokens that people launched, and then Bittrex allowed them to be traded. So in that respect, I have a feeling that in this case, the SEC and Chair Gensler is probably right. Bittrex is probably operating an unlicensed exchange. And Bittrex, by the way, has already pulled out of the U.S. They did that, I think a few weeks ago. So this seems kind of like a bit of closing the bar door after the horse has already left. Actually, literally closing the bar door after the horse has already left. So I think what's important here is pointing out specifically which I think 5 crypto assets they deem as securities. Of the thousands that Bittrex had, these 5 got singled out. There doesn't seem to be a whole lot of rhyme or reason as to which ones and why. As a matter of fact, one of them is Dash, which is incredibly decentralized and has been from the beginning. So it seems odd that it was chosen. Maybe it was chosen because it has a relatively large market cap compared to most. Another interesting one that was chosen is Algorand. And there is video of Chair Gensler saying great things about Algorand because Algorand was started by one of his buddies at MIT, who's a professor there. And Chair Gensler at an event for MIT was talking about how great Algorand is and how many great things that blockchain technology can do for the world. And then here he is saying algo is actually a security. And what I think we're getting at, Mehdi, here is not necessarily the prosecution of Bittrex, right? Because they're not in the US. It doesn't matter. There's nothing they're going to be able to do to them anyway, because they don't intend to come back to the US. They probably don't intend to operate here at all. I think the idea here is if the courts can uphold that these are securities, then we start to have a test, right? Then we start to say, well, if algo is a security, then all of these other tokens that get listed on Coinbase and Gemini and everywhere else are tokens because they were offered exactly the same. They're equally centralized or decentralized. And I think what the SEC is doing with all of these different, with not all, with several of these actions, like this one against Bittrex, like the one they launched against Terra for some reason, after Terra has long since collapsed and was domiciled in Korea anyway. Some of these actions I think, are simply to get the courts to say, yes, this is a security. Right. Bittrex is likely not going to fight this. So it's just going to be out there that these five are securities until someone has proven otherwise. And therefore, we can compare all the other security or all the other crypto assets that Coinbase has to Algo and Dash and some of these others. And therefore, maybe these five were chosen because they have different characteristics, but they encompass 1,000 different tokens that are available on different exchanges. And therefore, we can go, all right, everything else is a security because the courts have upheld that these five are.
So we've got some action from the SEC on classification of some assets as securities and such. We've now seen Gensler also getting grilled by the House committees on classification of or how to approach some of these cryptocurrencies. Right now, forget what's happening there. But is the bigger picture of this that we're now going to start seeing less and less innovation out of the US because you just can't do anything in this type of opaque universe from a regulatory perspective. We've already seen, as I said, Coinbase is looking to bounce from the country because it just doesn't make sense. But also at the same time, that's going to make people looking to dedicate their time, efforts, careers towards building on some of these digital assets and taking things to the next level and innovating and creating. It makes you think twice.
Well, it's more than think twice. There are several venture capitalists that say we're not going to give you money if you're going to be domiciled in the US because we're too worried about what either the SEC or the OCC or the Fed is going to do to you. And it's not worth it. We know there's a huge market out there. We know that you can build outside the US and several jurisdictions that are very friendly to what we're doing. And we're not going to fund your organization. We're not going to fund your project, your protocol, or your company unless you move outside the US. Now, you alluded to Coinbase. They haven't said we're looking at moving. What they were saying was if this regulatory stance continues, then we have to look at moving because it's what's best for our business. And so it's something that they're entertaining, I guess, internally. Whereas they have said we're going to dig our heels in and fight the SEC on, based on the Wells notices they got. But they also might say, we'll fight, but we also might have to leave because it's not necessarily that they're so anti-crypto. The regulatory regime is so anti-crypto. It's just so opaque. We don't know. We don't understand the clarity. And you brought up the testimony yesterday in front of Congress, in which case Representative McHenry asked over and over and over again to Chair Gensler, is ETH a security? Is ETH a security? And there was stammering and I can't answer that, or let me talk about 10,000 other tokens. And he couldn't answer that. But then over and over again says the rules, the regulations that we have in place, that we've had in place for 90 years are enough. We don't need any more. But I can't answer whether or not the second largest cryptocurrency is actually a security. That those seem to be diametrically opposite.
Well, I think that's exactly what he was saying during the Bittrex situation as well. I think the phrase he said was, yet again, it makes plain that crypto markets suffer from a lack of regulatory compliance, not a lack of regulatory clarity. So, as you say, they're sitting on 90-year-old regulation. Great, you have that. Everyone understands that, but it's not applicable necessarily. So, and that gap is what's not being bridged by the SEC for clarification.
Exactly. And I think that's some of the worry and what many members of Congress were talking to, and I'll say talking and say that nicely, talking to Chair Gensler about yesterday was you seem to have something about crypto that you don't like. You're not looking at the innovation. You're not looking at the positive aspects. And maybe we need to create new legislation. Maybe we need to create new regulation, or maybe we need to go, look, we're going to sandbox this for a little while. We're going to take a look at it. We're going to see what gets built and then regulate that, much like we did with the internet, right? We just kind of looked and said, let's see where this goes, see where people take it, and then let's figure out what new regulation we need to put it in place and what fits from the old regulation. And I honestly think there's somewhere in the SEC that they're worried that there's going to be a whole new regulatory body that's created, right? Much like in, we've seen in New York that crypto, some crypto is regulated, differently than banks. So they don't just necessarily fit it directly into the regulation they already have.
Well, let's see how all of that pans out. But in the interim, it's nice to see there's more and more applications coming about. We just saw that Twitter, our old friend Elon Musk, is now offering crypto, well, and other stocks and shares trading. But you can now trade your crypto on Twitter, and they're doing that in partnership with eToro. So this is a step in the right direction here.
Uh, well, it's a step in the more adoption direction, more people able to invest in it. I don't know if it's a good thing or a bad thing. If I'm on Twitter and someone says something positive about some token, and I can just hit a button and it takes me to eToro and I can buy it and I don't have to think very much about it. I will say it will likely have more people trading crypto, or likely have more people buying. Unfortunately, it will probably have more people speculating because, as we know, so many of the people on Twitter are influencers, or they're just shilling something that they shouldn't be, and you're giving people fewer steps to go buy it. I don't necessarily think it's a good thing, but I think it's the direction we're going to go anyway. We also saw, this past week, Apple released basically a savings account, right? So through my Apple card, through my Apple wallet, I can now earn 4.15% in a savings account, which is, I don't know how many times higher than I can earn at any bank in the US. Right. So it's Apple doing this with their wallet. It's now Twitter wanting to be a full financial service, full like everything company. And that's kind of the direction we're going to go, is everything's going to happen on your phone and in your wallet and such. So you could see where Apple and Twitter one day will have crypto wallets at some point. It won't necessarily be get you to eToro, but it'll be like, okay, on Twitter, you can just access your Twitter crypto wallet. You can just access your wallet straight from Twitter. And I think that's what Twitter and Apple and probably Facebook and LinkedIn, like that's what everyone's going to go towards.
Which is great. Yeah, I think that's it's adoption. Whether it's actually, I say it's great. It's adoption is adoption, right? It doesn't necessarily, as you say, it doesn't necessarily mean it's good or bad. But one of the things that we do need to bear in mind is what will get looked at is your FICO score when you're trying to find some of these things. And talk to us about the FICO score now, Adam, the blockchain that's underlying our FICO score.
I'll talk to you about this part of FICO. I'm not a big fan of FICO scores, but the company called FICO, now used to be called Fair Isaac, actually has received a patent to utilize blockchain technology, and in this case, they're utilizing blockchain and kind of AI technology to help use that immutable, transparent ledger on blockchain to kind of help track some scores and to make sure that things that happen on chain, or things that are happening with your finances don't get wiped away, and we don't lose those. And that to me that's basically my very basic understanding of what this patent is about. I'm obviously not a huge fan of patents in the blockchain world either, but that's what FICO has done. And I've talked in the past, I think, about the idea of on-chain credit or on-chain identity, and this seems to be kind of going that direction of, once we're able to see what you're doing on chain, once we're able to see what you're doing in your wallets, we can then, the whole idea of FICO is we're going to give anyone who's wondering an idea of your ability to repay loans or to repay debt or to pay your bills. And if we can use one, AI and a predictive model, and two, blockchain to see what you've done in the past, we can get a better prediction about what you're able to do in the future.
It's a very, like it or not, but it's a very good application of the blockchain technology in its utilization. I think it's kind of cool.
Right. And look, if they can just change the scoring mechanism, that
Yeah.
I'd be okay with that, probably. But there are several companies or several projects that are working on-chain credit, and not to say credit like I'm going to go borrow money, but on-chain giving me a score in terms of what I'm able to borrow now, my propensity or my ability to repay. And the fact that blockchain technology is so transparent that those organizations they're able to look across everything I do, they're able to look across what I own and kind of give me a score, and hopefully it'll be a score that is more relevant to what I'm trying to get. So my score for maybe borrowing, my score maybe for trying to get a mortgage is different from a car loan, is different from a credit card, is different from whether or not I can buy a sofa and pay for it over 2 years. right? So maybe this is the ability to go Adam's ability, the Adam's wherewithal and ability to pay for the sofa over 3 years is different from his ability to pay for a house.
Absolutely. And that's the type of granularity you'd hope that this type of transparency, this type of technology can bring with it.
Right. Exactly.
Well, Adam, I think the time is up, but it's always exciting talking crypto, digital assets with you, and week in, week out, there's always new stuff to talk about. So thank you for sharing your thoughts.
Always something, Mehdi. Happy to be here.
And I want to urge our viewers, don't forget to check out Adam's course on digital assets and crypto education at interaxis.io. The website's down there. And don't forget to subscribe to Your Finance TV, or you won't know what you're going to miss, or what you're missing, or have missed, or might miss. Anyway, thanks for joining us on the Crypto Revolution. Until next time, good luck investing.